Hello, I'm Nicholas Hyatt, Investment Manager here at Wealth Club, and today I'm with Richard Court of Octopus Ventures to talk about Octopus Apollo VCT. Richard, for those who aren't familiar, could you tell us a little bit about Octopus Ventures and also a bit about your background?
Of course. So Octopus Ventures is part of Octopus Group, which, amongst other things, is the market-leading manager of VCTs. We have investment teams who cover a spectrum from early-stage investing all the way through to companies listed on AIM. I sit within Octopus Ventures, which is the team that manages the young, high-growth, unquoted assets. We've been around since 2007, and we have one of the largest investment teams in the market in the UK and indeed in Europe. I am a partner within Octopus Ventures, and I'm the fund manager for the Octopus Apollo VCT. I joined Octopus in 2017. I've been the fund manager for over 5 years, and I have been investing in UK smaller companies for over 15 years now.
What does Octopus Apollo seek to do for investors?
Apollo is the second largest VCT in the market. It seeks to deliver a 5% tax-free dividend to investors, plus the opportunity for capital growth on top. Investors get access to a pool of high-growth, unquoted, so private assets that they wouldn't otherwise really be able to access. And they get instant diversification. That's one of the beauties of VCTs, is investors coming in to a VCT get instant diversification across the entire pool of assets held by that investment. We look to invest in a way that delivers more stable, more consistent, lower volatility returns versus a conventional venture capital approach. And that is all delivered within the tax-efficient wrapper of a VCT. So 30% upfront tax relief to the investor, as well as tax-free dividends and the opportunity for tax-free capital gains as well.
Octopus obviously manage a couple of VCTs. What does Octopus Apollo look to invest in?
So two main themes, one about types of companies, one about stage of companies. In terms of types of companies, Apollo invests solely in B2B software companies. So those are software companies selling to other companies as their customers. And there's a reason we target those and a reason why we like them. Firstly, there's lots of them. So it's actually, we sit in a privileged position in the UK. We have a kind of front row seat on the innovation that is occurring in this space. And there's a real army of innovators, entrepreneurs out there building really exciting businesses. And that's driving digital transformation of almost every industry across the UK and beyond. There's also, we think B2B software companies are also more resilient, less volatile, more stable, potentially more predictable than consumer-facing companies, which can often be more volatile. And so that's kind of inherent. When we think about targeting lower volatility for Apollo, we like those kind of companies. And the other way we do it is by the stage of investment. So all VCTs these days have to invest in young, early stage companies. But even within that spectrum, Apollo aims to come in at a slightly later stage. That is to cut out the very early years of a company's journey. And that means we may miss out on getting in extremely early in something that goes on to become large, but it also means hopefully we'll miss out on those really difficult years where a number of companies will fail in those early years. Typically, when we invest, a company's already been in existence for around 4 years at least, and we set a minimum floor of at least $1 million of annual recurring revenue at the point we enter. And all of that is designed to minimize the failure rate, increase the chances of making steady, consistent returns in line with what we're trying to do in Apollo.
And can you give us a couple of examples of companies that Apollo's invested in recently that really encapsulate all of that?
Yes, of course. So one company that we invested in recently is a business called Logify, which is a provider of software to property managers, so those managing, in particular, holiday rental properties. And it provides a system which automates the end-to-end workflows for those property managers. And in particular, if you're renting out holiday properties these days, you've got a number of channels to post those properties to. You've got the ones that everybody knows about, Airbnb, Booking.com, but a whole host of others. And you want to have a live visibility of your inventory across all of those platforms, avoid double bookings, avoid having to segment your bookings. So giving that real kind of live dynamic view. That means the property managers can optimize their portfolios of properties, do everything more efficiently. And that's a real kind of good example of the types of companies driving digital innovation in an existing area, executing better than the competition, and using that to drive the growth. Another example is a business called Pendula that we invested in earlier this year. That is a marketing automation tool which aims to drive better quality customer conversations at scale. So put that in simple terms, they sell software to large organizations like utilities, telecoms companies, which may have hundreds of thousands or millions of customers, where having one-to-one conversations just isn't realistic, but they want to have effective, dynamic conversations in a largely automated way, so that they can drive efficiencies in their own business model whilst also driving better outcomes and customer experience as well.
So what about the more established companies in the portfolio, things that have been there a while? How are they getting on?
With Apollo, we have spent the last few years really transforming the portfolio, and we've gradually exited nearly all of our older holdings, any of those which sort of predated the technology focus. We have a very small number left. But pleasingly, all aspects of our portfolio, whether that is the bulk of the more recent investments or whether it is the small handful that are older, they're all continuing to deliver strong performance, which is really pleasing. But we've got a really clean portfolio now, where the vast majority is invested in these B2B software companies, and that gives me confidence that the core strategy is working and sustainable.
So you've sort of suggested that you're investing in slightly more mature businesses, maybe than other VCTs might. Does that mean that you're just giving them a check and walking away, or do you still get involved in the day-to-day business running at all?
Yeah, I think everything is relative. So these are still young companies. They still need help, and we offer that help, absolutely. So as well as investing the financial capital, we hopefully bring lots of additional value to the companies. So I have a team that works entirely on Apollo, and every single one of the companies we invest in, we join the boards of those companies, and we're really there trying to help them navigate the challenges, the opportunities that are common across the companies that we invest in. So whatever sector those companies are serving, and B2B software serves a huge range and diversified range of end sectors, chances are they are facing some of the similar challenges, similar debates, similar discussions. So do we go faster? Do we go slower? Do we internationalize? Do we stay domestic? And those kind of themes, how do we attract great talent? What does a good look like in a sales organization, in a marketing engine, those kind of things. And we can bring our experience across the portfolio. Allied to that, we have one of the biggest talent teams in the industry within Octopus Ventures. So these are specialists who can come in, help with key senior management hires, key recruitment, organizational design, benchmarking of compensation and things like that across our portfolio. And lastly, we have the largest portfolio in the market. We have over 180 companies across Octopus Ventures, and that means that we can have that network effect. So if a company is facing a challenge, even if we as individuals on the board can't help them solve it, chances are multiple other companies in our portfolio have faced the same challenge. We've had examples of companies sharing offices, flexible office space, those kind of things. Or if they need to expand into the US, how do they enter that market? Where do they go? Where do they land? Those kind of benefits where we can bring the wisdom of the crowd to bear to help those portfolio companies.
The economic picture has changed an awful lot in the last 18 months, 2 years. We've seen interest rates obviously rise significantly, inflation's been well up as well. Has that changed the way you invest at all?
It hasn't changed the way we invest, no. It hasn't changed the types of companies we invest in, it hasn't changed the way we invest. And actually, Apollo's performance has held up really well across that period, both through the kind of up period and then subsequently through the down period. And when I say down, I mean kind of technology valuations coming down. So I think it's been a really strong validation of our approach. So looking for lower volatility, looking for greater consistency, looking for companies which are resilient. I've always looked for companies which are capital efficient. So that means they're not burning excess amounts of cash to grow. We always look really closely at the kind of efficiency metrics of that. So I think in 2023, we've seen a continuation of the theme that we saw in the second half of 2022. Yes, technology valuations have come down, but you have to remember that VCTs are a medium to long-term investment game and an investment holding period for people. So actually, we're able to invest in companies now at what I'd call kind of sensible and normal valuations. All the sort of froth of 2021 has kind of come out of the market. And I think history tells us that usually these are some of the best cohorts to invest in when you're in more challenging macroeconomic conditions. It doesn't make it easy, but it does mean that the valuations you enter at can often drive some of the best returns.
So it sounds like B2B software is perhaps a bit more resilient than other parts of the venture capital landscape, but investing in early stage companies is obviously always risky. What proportion of companies do you expect to fail or not make it when you're making an investment?
Yeah, so pleased to say, because of the investment strategy we adopt and the style and the stage that we come in at, we have a really low failure rate. We're looking for companies which have brought their product to market. We avoid companies where there's sort of binary risk of will it work, will it not work, or that only one can survive in this market, sort of winner takes all type markets. We avoid those. So I'm really pleased that we've got a really low failure rate, and we've got a really strong track record of not losing money for our customers. I think clearly from time to time we will get it wrong. That is in the nature of investing in young companies. But all of those factors that I've talked about mean that yes, we should have a low failure rate, and that is what is borne out by the data and the history of Apollo so far.
So on a more positive note, have you had any exits recently that you could tell us about?
Yes, earlier this year we exited a business called The Safeguarding Company. We first invested in 2019, had followed on into it to help accelerate its growth, and we exited earlier this year to a larger education software player. So during our period of investment, we helped them expand domestically, but we also helped them expand internationally. They got their first customers in the US, and that's a really exciting part of their future pathways, is bringing their products to an international market. We made 3 times our money on the equity investment part of our investment, which is, as well as being a strong financial return, interestingly, actually, it's a really great example of a company which has a really great purpose and mission, and that's important to us in Octopus Ventures and Octopus Group. We like to invest where we can with companies which have a strong purpose and mission. In this case, the company was selling software to schools to look after the safeguarding of children and other vulnerable adults. So, founded by 2 former police officers who had a background in that space, had realised that schools were still largely doing it on paper, were potentially missing things, and that better insights could be gathered by automating this, having full audit trail, and actually from time to time their system being used in successful prosecutions of people abusing children or vulnerable adults. So successful financial outcome for our shareholders. That's obviously important to what we do, but also a great story about the purpose of that company and what it's trying to achieve.
And what about the performance of the VCT as a whole? How's it been doing?
Yeah, I'm really pleased to say that Apollo's had a really strong period. So we've had 3 consecutive years now of double-digit performance, and that's really been strong validation of our investment approach, because that performance has occurred through both the sort of the up cycle of the economic cycle, but also the down cycle, showing the resilience that we've tried to build into our strategy. That performance has translated into, when you look at the league tables that our industry operates from, over 1 year, 3 years and 5 years, Apollo is now right up there in the kind of top quartile. And importantly, I think we've got a really sustainable model. We've got a large team with specialist knowledge, specialist network, which means we can find deals, we can access great entrepreneurs, and I think we built a sustainable model for what we do that gives me confidence going forwards as well.
And what about dividends? Obviously, they're an important part of total return. What is your target?
Apollo aims to deliver a 5% tax-free dividend, which it always has delivered. There's always the opportunity for special dividends on top when we have particularly successful or significant rates of exits. We have examples of that in the past. They're never guaranteed, but they can and hopefully will occur again in future. We have good dividend coverage. I've just mentioned one of the exits we've had earlier this year. We've got a pipeline of other exciting exits to come. So I'm confident we'll be maintaining that dividend policy.
And just to sum up, Richard, if I was looking to invest in a single VCT this tax year, why should it be Apollo?
Yeah, that's a great question. We recognise people have a choice in the market. We've had great shareholder support. We've really grown Apollo significantly over the last few years to make it the number 2 VCT in the market. So an an investment in Apollo, you are investing behind the market-leading VCT manager. So you've got years of experience, 15 years of experience in Octopus Ventures, managing now the two largest VCTs in the market. So you've got all of that knowledge and experience of how to find and invest in and ultimately exit good quality, young, unquoted companies. In addition to that, Apollo's performance has been really, really strong. So I think really strong validation through the economic cycle, which I think is here to stay. And then when you look at the product, I think if you're an existing knowledgeable, experienced VCT investor, but perhaps you've only ever invested in Titan as the market leader, the biggest fund, we offer a really complementary product, both in terms of diversification, totally different portfolio, different set of companies, but also in terms of stage. So different risk return profile, different volatility, sort of lower volatility products. But also if you're new to VCTs, if you've never invested in VCTs and think, oh gosh, investing in startups is really scary, I think we offer a fantastic entry point. So companies that are slightly later stage with that portfolio wrapper, so you get diversification, you get that hopefully low failure rate, means that actually within the realms of high risk early stage investing, I think Apollo can be a good, consistent performer. And lastly, it's easy for me to say this with words, but I've invested a lot of my own money in Apollo because I think it's a really great product.
Richard Court of Octopus Ventures, thank you very much.
Thank you.
If you're watching on YouTube, please press like and subscribe to the channel for more.